Good afternoon, everyone. Let me give you broad highlights of quarter one of FY23 and refresh memories on our strategic vision for APSEZ. Quarter one of FY23 has been the strongest quarter in APSEZ's history, wherein some new benchmarks got created. These include a record quarterly cargo volume of 91 million metric ton, which is 16% increase quarter on quarter and 8% year on year. Carrying forward this monthly record run rate of 30 million metric ton in July, APSEZ achieved 100 million metric ton of cargo throughput in just 99 days of the year, which is another record for the company. Highest ever quarterly EBITDA of Rs 3,005 crores, which is a good 11% jump on a robust performance in the corresponding quarter last year that witnessed the post-COVID demand surge. Record year-on-year expansion in the EBITDA margins of logistics business by 370 basis points. Alongside this record operational performance, APSEZ also continued its effort to commission new assets across the two businesses segment, ports and logistics, to boost the company's growth in the coming months. The assets operationalized during the quarter in the logistics business segment include an MMLP in Taloja, 3 agri-silo storage terminals with a combined capacity of 0.15 million metric ton and warehousing capacity of 0.6 million square feet. In the ports business segment, APSEZ is set to commission 2 new terminals in the coming months. The container terminal at Gangavaram Port will become operational next month, while the 5 million metric ton LNG terminal at Dhamra will be ready by December end. This LNG terminal has a take-or-pay contract with couple of oil and gas majors and will start to generate revenue soon after its commissioning. During the quarter, APSEZ also made 2 strategic acquisitions, which will help drive its growth in coming months. These are Ocean Sparkle Limited, which is India's leading third-party marine service provider with over 60% market share, and the Haifa Port Company, which manages the largest commercial port of Israel. The winning bid to secure 100% stake in Haifa Port Company was made in partnership with Gadot, with APSEZ having 70% share in the consortium. Coming to financial performance in quarter one of FY23, despite a strong performance by both the ports business and the logistics business, the consolidated revenue for the quarter was nearly flat at Rs 4,638 crores. This was due to a reduction in the SEZ revenue by Rs 725 crores versus quarter one of FY22. This is in line with our expectation and is already factored in our annual guidance. Overall, the total EBITDA for the quarter grew by 11% year-on-year to Rs 3,005 crores. Port revenue increased 18% year-on-year to Rs 4,090 crores, and EBITDA also grew in line by 18% year-on-year to Rs 2,885 crores on the back of 8% increase in cargo volume. Overall port EBITDA margins stood at 71%. Revenue from logistics business stood at Rs 360 crores, a growth of 34% on account of improvement in container and bulk rail volumes. Our efforts to diversify by adding bulk cargo, elimination of loss-making routes, and operational efficiency resulted in significant increase in EBITDA and margins. As a result, the business EBITDA grew by 56% to Rs 96 crores. The EBITDA margins expanded by 370 basis points year-on-year to 27%. The profit before tax for the quarter stood at Rs 1,030 crores. After factoring a negative tax of Rs 61 crores, the PAT is at 1,092 crores. Please note that the PAT is after providing for non-cash mark-to-market loss of Rs 1,200 201 crores on the dollar denomination loan, which is also the reason for negative tax. APSEZ continues to enjoy its investment grade rating from the third party rating agencies. While the two global rating agencies, namely Moody's and S&P, continues to retain their stable outlook on APSEZ, Fitch has recently revised its outlook to stable from negative earlier. APSEZ has been maintaining its key ratios within the desired range despite its rapid growth. Let me conclude. Our cargo volume run rate of 30 million metric ton in the initial 4 months of FY23 is in line with our guidance of 350 to 360 million metric ton for the full year and will enable us to deliver on our guided EBITDA of rupees 12,200 to 12,600 crores. Thank you.